welcome to the Business of Property podcast. I'm Stuart.
And I'm Simon.
We're both property people running our own businesses, and this podcast is just us chatting, as we often do, about anything and everything property. And last week we had a little bit of an update session, or from my perspective, probably more of a counselling session around things that had fallen through, and it certainly helped. But we were thinking back about the series of particular elements of property investing and purchasing, and we thought this week we'd have a bit of a conversation around funding. So if you can remember, towards the end of last week's episode, Simon talked about the facts of his property sale completion, and he's using the funds for that to help fuel him buy more buy-to-let properties. So Simon, I thought we could just talk a little bit about why you follow that approach, because we do have different approaches to this, although they of course cross over, because I likewise do sell a property to support purchasing others. But you haven't ever looked for external funding, so I just wondered if we could have a chat about that.
Yeah, certainly. I have wondered about seeking external funding, and completely without requesting it, I have actually had a couple of conversations with people who have said, "Oh, you're in property and you're purchasing an investment property." This is back when I was last looking a few years ago, and they said, "Oh, I've got some savings in the bank, and I've wondered about this. Would you be interested in doing something together or helping me find something?" And well, for starters, I've said no. But more interesting probably is why I've said no. And that really comes down to, I think, me being concerned about taking on the responsibility of other people's money. I don't quite know why I have a bit of a hang up about this, but I know I would find that very stressful, having that responsibility, which is strange because I have been on the other side of that fence, and I have declared myself a sophisticated investor, as the term is, and I have put money into JV projects with other property people. So I've been the or one of many providing capital into a project. And from that side of it, I go in with my eyes open. I know that the property might go wrong. The project could go completely pear-shaped. I'm unlikely to lose all of the money, but I might not be able to get consistent interest. I may potentially have a downgrade on the capital that's gone in. And worst case, I could actually lose all of it. And I go in with that knowledge known, and I can accept that. But when I consider it sort of the other way round, even though I'm sure any potential investor providing funds to me would also have that knowledge and would also be going in eyes open, I still wouldn't want that responsibility of knowing that I need to look after their money and not let it decrease and not let it go wrong. And then on top of that, also be paying interest on top of it. And I mean, of course, I do take funding from banks. So I do have other people's money. I do pay interest on it. But it's just a bit different from knowing an individual who has provided money that I then have to look after. So yeah, I've always said no, and I think I cannot see myself changing that for the time being, just because of that personal hang-up of mine.
The funny thing is, I agree about that, because it's funny, if a bank said they were going to give me £100,000, I feel a lot more comfortable about it than when an individual does the same. And it's strange because I don't know why. I think if it's a bank, I know that all of the mechanisms are in place to fulfill my obligations. But actually, that doesn't change, even though it's an individual. But it's funny how we think like that, because I'm the same, and I'm currently thinking about restructuring my debt. I think that's the formal phrasing for it. But it's interesting. So do you think it's the pressure? Because when I hear you talking, I think that would probably make you someone good to invest in, because you do think like that, and because that's how I feel. I do feel, because it is pressure, and I do feel like that heaven and earth has to be moved to make sure that we meet the the obligations of the investor.
Yep. And yes, I can understand why that would actually be a good sign. But I yeah, no. You say you had the same thoughts and the same feelings. You have obviously got over those and taken funding from individuals, people you actually know and have met, and you know what they look like. How did you sort of get over that? If it was a worry for you, what made you decide to carry on anyway?
That is a really good question, and I think it's because my desire to grow the business was greater than my concern about that pressure. So it was the ambition of doing what I wanted to do, because I set out with a very big ambition, potentially too big, to create 100 rooms in around a year. 4 years on, and we're probably just over 50, and I'm very, very happy with what we've done. But I think I wanted to grow very quickly, and I knew very soon. Obviously, you read a lot about no money down, no money in, all of which my mind is very clear on now, which is those things may be possible, but 99% of the time there is someone's money in and there is some money involved. It just might not be yours at the outset. But yeah, I had the vision, and I think finding the properties that I wanted, knowing, and I think once I had a little bit of experience of thinking, okay, I've got a few properties, I know what the market's like, and I know what we're going to do. I think I felt a lot more comfortable taking that money. The truth is, though, I think you do have to have a very, maybe not a resilient mindset, but you do have to have a mindset that is capable of not thinking about those things all the time. Because the truth is, there is barely a day that passes without me thinking about the funds I need to return to investors. I mean, to put it into context, over time, we've borrowed, the company has taken over £400,000 worth of investment, individual investment, around that figure. And we still have six-figure investors in the business. And that does, I wouldn't say cloud my thinking, but it's always there, because when you're paying interest rates, and bear in mind, we're paying good interest rates. If you think that current savings, I don't know what your savings accounts get, but mine's something like 0.1%. It's a lot more than that.
I think that's good. I'm sure I recently got a letter from mine saying it was going down to 0.01%.
Yeah, you might as well just set fire to it in your house. The So investors are clearly getting more than that, and our investors are, they're getting much more than that. So that is quite a burden for a business to take on as cash flow, if we pay the interest quarterly. So it's something I think about a lot. So I think as we're having this discussion, I'd say it to anyone, that is the thing to be mindful of, is that it is a lot of responsibility if you're going to deal with it in the right ways, which clearly we would.
Yeah, I think it would play on my mind as well.
It does. I wouldn't say I've ever had sleepless nights over it. I think that is part of my makeup, is that I see it as part of the business. And as we said on the last episode, I've had to make very difficult phone calls that I didn't want to make, where fortunately they've been rare, but where I've had to phone and say, dear investor, could we please have a pause on interest? So that's never a good conversation, because most investors are investing, well, they're investing for good interest rates, but some are investing for cash flow as well, because they get fixed cash flow. Just to say, can we put it on pause? Or potentially, could we change the interest rate to lower just to reduce our burden? Those aren't conversations you ever really want to have. Certainly not me, because I'm the sort of person where if you and I have agreed on something and I've said, this is what I'm going to give you, and we've shaken hands, that there is something in me that would only ever want to do that. But from a business standpoint, you can't. What I've learned is that you can't always do that. Integrity is great, but equally, if the business can't exist because you're so fastidious about not going back on your word, and it's not. I think at the end of the day, if an investor's invested for more than a couple of years, which some have, and you say, look, we're going through some rocky times, and of course, I'm very fortunate. The investors I work with are clearly business people, clearly good people, and just they understand that we're going through challenging times and that cash flow isn't as consistent as it once was. We've got roadmaps for how we're going to get out of it. But I think even just talking this through with you, I think it demonstrates that you've got to have a lot of thought around it. It does take a lot of time. And equally, when you've taken large amounts of money like we have, there is always that element there to think about. Is at some point those funds, that capital has to be returned, and that is not as easy as the magazines or books might tell you it is.
I think what you're saying in summary, at least at the beginning of that, was that sometimes the world changes, and you have to accept that business needs to change along with it. So it's more about how you handle those changes rather than the fact that there are changes. And as you said, it's about openly talking to people and making things clear and showing that you do have a way forwards and hoping that people are willing to continue the journey with you. Yeah, one thing that you mentioned there sort of is the fact that this funding is always in the background of your thoughts. But you and I both have mortgage funding, and I don't know about you, but I don't ever really think about that, except when it's up for renewal or change or whatever. And I wonder if it really is just the sort of faceless nature of the big corporate lenders that really changes that dynamic in the way we think about it.
I think I think there's definitely an element of that. It's personal, isn't it? You're looking someone in the eyes. We no longer meet with bank managers. It is quite faceless and impersonal. Certainly, my experience of the mortgage lending is, and the strange thing is, I don't want it to be like that. I want the relationship. I want, I've got several mortgages with the same lender, yet every time I phone them for a mortgage, it's like day zero, and it frustrates the hell out of me. But I think you are right that when we have a private investor, this is now personal. We've got someone there and that word beholden, yeah, that is sometimes how it feels. Although I'm very fortunate that I have an investor who isn't like that. And I think for anyone thinking about it, you do have to be. I wouldn't take money over relationship. And I've had friends of family invest, and contracts were signed, and there were minimum 2-year contracts. But again, probably to a fault, when this friend of the family's life situation changed, and they said within 6 months, I really need that money back. What did I do? I did everything I could and got them that money back within 8 months, when really it should have been kept in doing what it was doing for 2 years so that I could actually deploy it effectively. But because of that personal nature, and because it was a friend of the family, I kind of thought, well, and a friend of mine, I don't want to, sully our relationship because of money. So that was a good learning for me now, which is, and I've also met investors where 2 years ago, 3 years ago, I was close to taking funds from them, but there was something in me, something in my gut, and we all get this about certain people. 1 in 10 might be, but there was something about saying, "Oh, I'm just not sure about this." But when someone's got a check in front of you with six figures on it, sometimes you think, "Oh, maybe my gut's just hungry." I mean, I don't know, but fortunately for me, we didn't enter into that relationship. And now, if I were in that situation again where someone put a check in front of me and my gut said no, I would just say it's, I'm very privileged that you'd offer that to me, but we're not looking for funding right now or something,
Mm.
because of those things that we've talked about. I think you've got to be very mindful that it is a people business. So I wouldn't want to necessarily work with people that. And I guess this is the other part of the faceless element that you talk about. The bank gives you the money and then lets you get on with it. So the only time the bank will ever call you is if you do not meet the mortgage payment. So I think that for me relieves a lot of pressure, because the truth is you can go out in the world and then go and do whatever it is you got to do. And I think that for me is why I would prefer bank funding over individual, because I just know I just got to get out there and do it. Whereas when you've got private investors, it's like having shareholders. You may have a weekly meeting, you might have a monthly meeting, you might have a quarterly meeting, but they can be very forthcoming about what they want you to do. Now, my investors, fortunately, are not like that at all. That didn't happen by design. It just happened because we've got those relationships where I believe they trust me implicitly, but I reciprocate that by ensuring that I deal with their money just the way you described how you would feel like you had to deal with it. But of course, you could end up with someone that does phone you on a weekly basis, and when they've given you money and said, "What colour tiles are you buying this week? Are you going to put the toilets in?" And there's an element where you just have to put up with that if that was going to be like it. But of course, there's none of us that wants that level of oversight on what it is we're doing.
Yeah. I'm going to go back a little bit in what you said and pick out one particular point. I know a lot of property sort of training and getting started processes and courses recommend going to friends and family first to help you get started in finding funds. But do you feel that that would be the sort of worst case for you? And have you now chosen that you or set out that you wouldn't go to friends or family again following that past experience?
I think we talk about that and we do that because it's the easiest thing to do. That's why we do it. Because when we talk about getting funds, you have to get them from your network because it's going to be people that know that. I think it always depends on the situation. So we still have some investment from some family, for example, and it's a significant amount of money. And again, I'm fortunate that the people involved are extremely hands off. However, I've got this cognizance that we still need to commit to the interest payments, and actually we should be thinking about returning those funds sooner rather than later. But if I could go back, I would just go out to the network that are not as close to home, even though it takes effort. And I think that is why a lot of people will not do it, because to go to former employers, to go to peers of ours at former businesses, takes extra effort. To go to mum and dad, to go to brothers and sisters and say, "Have you got a little bit of money?" is much easier to do, and therefore much easier to get. And I think, depending on the sums of money, and any sum of money that someone's going to invest you is incredibly important to them, whether that's 5k or 100k, that's their fund. So I still think you'll still go through the same things. What I would say is that for me, 5 or 10k is a bit easier to deal with because if the brown stuff hits the fan, you go to your credit card and you just refund the money and you disconnect that. When you're talking 50, well, 10, 15, 20 plus, in some cases you might be talking about people's life savings. So I think you just got to be very mindful of those things, and also that the big one for me that will always do it is that you will run out of funds. No matter how much you borrow, you will always run out of money. And it was one of these things I was told very early on when I started property investing properly. Someone said, no matter how much you've got in property, whether someone gives you even 100k or 250k, it won't be enough. And because of this message propounded in a lot of the courses, a lot of the magazines, which is around cashing out, no money in, there is this belief that it's like a goose that lays golden eggs, and it can be that, but it's, as you and I have talked about many times, it's so much more longer term than that. But my experience has been, even with 100k, you get in, you develop the property, but it could take us 5 years to get back all of the money that we wanted to get back. Could take longer, might take less amount of time, but it could take longer. So I think, there's this sort of belief that you'll start with a little pot of money, and then that is going to be like the coal that we turn into to gold or diamond.
Yeah, you can sort of plant it and it'll just grow forevermore and keep
Yeah,
keep sprouting. And yeah,
yeah.
it's not always that reliable.
So my view is if you're going to start seeking external, private investment, then you are going to have to build that network at some stage. So why not do it sooner rather than later? And I know that everyone will probably still follow that path of, well, where can I get the easiest money? It's going to be parents, it'll be close family, and then I'll move on. But actually, you need that network, and I find that easier.
Yeah. Again, I'm going to pick up on something you said early in that, but it would be my worst nightmare for someone to invest and say, yes, I'm a sophisticated investor, so I can give you money sort of privately, and you make that agreement and things, and then it turns out that 20,000, 30,000, whatever it might be, that they've invested in you and put in was their life savings, and they have nothing else to fall back on. And even if you don't do anything wrong, even if that money is safely stored in a property and continues to generate interest for them, just knowing that you have responsibility for someone's complete life savings. I mean, that just nightmare. Absolute. I would hate that. It'd be horrible. Yeah, I think you're very brave getting over that and
Yeah.
driving forwards with the expansion of your business through that. It's definitely a route that I don't feel like I could take.
Well, and that's what I was thinking at the very start of this conversation, just to bring us back full loop when you talked about it. And I think that's what it comes down to. It boils down to tolerance levels. What can we tolerate? Because if one feels that that is going to be too much, full stop, then clearly that's not the route. Don't try and force something that's not yours. Follow your route.
Yeah, I'm quite happy to take money from a bank and leave it sat in a property to compound over time and increase in value, and then remortgage and get some more money from a bank and roll again with that. And that's the route I've chosen, and that's the route I'm going to keep following for the foreseeable.
and and neither route is more successful than the other. There are some extremely successful people, and I use the word successful just in terms of meeting whatever goals they'd set out. But there are some people that have done that, cut and pasted, and grown extraordinary wealth from it. And but that might not be the goal. Equally, the same for my route. It's really what our objectives are, as we've talked about before. What are the objectives we're looking for, and making sure we're comfortable with going whichever route it is.
Yeah, I think taking external funding allows you, as you said, your reason for it is it allows you to drive faster, push towards higher goals much more rapidly. If you're going to allow, well, if you're going to use your own savings plus whatever compounding from existing investments you get, it's fairly inevitably going to go slower, unless you're in a super high paid job and you can collect new savings and new funds very rapidly. It is most likely going to be slower than taking external investment to accelerate things. But as you say, you don't have to go super fast. It is acceptable to go slowly and build gradually. And I started my property portfolio, bit of mental arithmetic, 19 years ago, I think. And it's taken that time. And I am only now, 19 years later, and looking at another property, which I haven't bought yet, but the one I'm currently looking for. Once that is in place and earning money, earning profit, shall I say, at that point, I will have finally just about reached a level where property could be my only source of income, and we wouldn't starve. We would have to cut back. We wouldn't live life as we currently do, but we wouldn't starve. And that's after 19 years. And that's okay, because I've had a career alongside that. I've done other things. It just depends what you're expecting out of property. And I know for you were wanting to drive that process much faster. You were wanting to be able to replace your day job income in a much shorter time span, and hence why you weighed up the risks versus benefits and chose a slightly different path to me. But yeah, different people will choose different paths, and as you say, it's important to choose one that you're comfortable with and fits your own personal goals.
Yeah, I think there's a lot of noise, particularly in property world, when you get into it, and I think it's really just sorting through that noise to get to where it is where each of us wants to go. And I think that's probably something else for us to discuss, not on this episode as we draw to a close, but is I think our biggest learnings and our key takeouts really from your 19 years and my 13 years.
Yeah, I'm sure there must be lots in there. I'm not quite sure my memory is good enough to pick up any of the early ones, but but we'll see. We'll see what comes to mind when we get to that one. But yes, you're quite right. We are pretty much at time now. So do you want to finish up for today, Stuart?
Yeah, as always, we hope you're enjoying this show. And if you are, please share it with someone else, leave us a rating or a review, or if you're feeling really kind of want to put some positive karma into the world, all three. But for everything we've talked about, as always, go to thebusinessofproperty.com. Otherwise, we'll see you on the next episode.